Hi, just a quick update on how I would use Naked Delta's liquidity indicators to trade the market. I personally think they're the best indicators that I've ever seen in all of my trading or mainly investing time over the last 10 years. I've never seen anything that's quite as accurate at telling me what's going on. I do like open interest in using a time series matrix to have a look at how open interest is changing. It gives us a very good idea, but really we could have told that we were green the whole time just by looking at what's going on here in the SPY. We came out of this period here, which is a bit jumbled. It wasn't so jumbled in the futures. The futures, if we quickly open them up, were very green during this period, and again they're green now, even though we've had a little bit of a jumbled period over the last few days. The futures have been buying hard. But if I was just using the lit hours stuff, there's been great trading because we've had so much green. It's been so easy to stay in trades. On the closer look, we always trade in a little bit closer. I like the 5 minutes. I like to stand back a little bit so I don't get out of trades quite so easily. There's been some good trades in here. There's a little bit of a trade here after the bad PPI. There's a little bit of, and then some sideways, which, I mean, it's not worth shorting at the moment because we know the market's long. The open interest is long. There's no way you can short a trending market. You've got to stay with the trend. And at the moment, it is just so green. There's no point going against it. And you can see here again, we've got a market that's opening up today about in the SPY, we're going to be up about point one at the moment. We can see all this strong buying here. If we went a little bit closer, I don't like going too much closer, but if you're using large leverage, you might want to stay in closer and have a look for good periods. You might say, oh, look, this is a little bit dodgy here because of the size of my leverage. Well, I still think that there's not a lot of pullback there. It's just surfaced for a little bit, and you might get back in and get out here somewhere. But really, there's at the 5 minute period, it just gives you a better feeling for if a pullback is major. That would worry me. If I went that red, I'd get out and I wouldn't get back in until I saw that. And then you've got a little bit of upside there. But these indicators, here, this is great. It's to come in and it's told you can stay in it the whole way to the end. Now, at any time you might get bored, get out, or you might want to get out early here or somewhere like that. It's still given you a great bit of upside if you're using leverage in these high gamma, low vol markets. You're not going to see. And here we can see you're up 0.2 at the get out line probably. You've sort of gone in here and you're up 0.2, which it's a really good trade. Anyway, that's just a quick note on how I would use these two indicators to trade the market and support. So green is buying, red is selling. Above the line here in a regular liquidity is selling. Below the line is just ironing it out until you can stay in the trade, and that it's selling. The worst thing is you've probably lost, if you had a lot of leverage, you probably lost 0.1 depending on when you got out here at the top. Anyway, have a great day's trading, 18th of July. Thank you very much for listening. I'll give you an update tomorrow.